Bigham, option strategist at Pilot AI. How are you approaching your example trade for NVDA this morning, Tim?
Good morning, Sam. And yeah, looking at it kind of in a similar vein as you and Marley were talking about, and the analysts were talking about, incremental, or what I term slight positive, certainly for NVIDIA. I don't think it'll send the stock ripping to the upside. We're seeing it down today for that very reason, probably. But I think those kind of 175 lows we saw in late November and previously a couple times before that, major support down around there. So I'm kind of hanging my hat at that level. I would not be an aggressive buyer of the stock here, but on further weakness may get interested. So going out to next week's options, selling the 175 puts, hedging with the 172 puts. Want to keep it tighter than normal on the spread width, collecting somewhere around 50 cents, give or take, kind of like that just under 20% return on risk on the trade. Have about, 10 points or so downside from the current price of NVIDIA for the stock to drop before the trade gets in trouble, and only have 10 days to go. Broadcom earnings, as you alluded to, might be the last big earnings report we see out there. Might affect NVIDIA a little bit, but I think going forward, we're kind of stuck in this trading range, not only in NVIDIA, but the market overall, between the all-time highs and the recent lows that we saw. And I think it'll kind of continue into year-end, barring any kind of calamity coming out of the Fed meeting tomorrow, which I don't envision at all.
Yeah, 170, certainly the area of support there. That's when we saw certainly buyers stepping into this trade. But I mean, just one chip going to China, I suppose, is a bonus for this company because, its report looked good. Its earnings held up. That is ex-China. So, I mean, surely this is just being seen as a positive here. But just quick thought on the market today as we head into this FOMC decision come tomorrow.
I think, the 25 bip rate cut by the Fed absolutely baked into the market here. Certainly Fed Watch pointing towards a 90% or so likelihood of that, and probably 2 more rate cuts next year. So I think the market has kind of gotten what it's wanted out of both the Fed and earnings, which were good, not great here. So I think we're going to be probably in a trading range until further notice on the market. I think it's a good time to use option strategies, kind of like the put spread we just talked about, or selling some covered calls up above, position to be a seller on rallies, a buyer on dips until further notice. Kind of a trader's range market for the next several months.
Awesome stuff, Tim. Thank you so much for getting us across that, an example trade for us for NVIDIA and your thoughts on the market. Tim Bigham there, options strategist at Pilot AI.